and welcome back to the Rex News channel where we discuss issues and trends facing the oil and gas industry. If you are new to the channel, kindly like, subscribe and share to stay updated with the current trends. We have with us today Pranav Khan, a seasoned expert in the oil and gas industry. Welcome back, sir. How is the day going on so
Thank
far?
you. Day is going on good. Logging in from Bangalore on this Saturday 7th at about 5 o'clock in the evening.
That's good to know. I will start with my first question for you today. Last week, Brent and WTI were down over 8%. Is this trend going to continue?
Yes, a short answer is yes, and certainly it will continue. And why it will continue is the more important part of it. And that's where we are quite consistent in our assessment, and which has been proven correctly, that we are seeing a global slowdown. Now, look at US, Europe, and China. China first, the slowdown is the most visible. Despite the lifting of the COVID curbs, the situation does not appear to be as linear. So we remain very sanguine about the China reopening led demand bull hypothesis. So we do not buy into that. For one of the main reasons being China's product inventory and the domestic production of crude, both are at multi-year high. So, and the opening is largely leading to a upward blip in the jet fuel demand, but not in the gasoline and diesel. Large part of the crude import recent increase has meant has really fed into the more exports to the European Union. But that's a kind of a market which is not growing. So overall context, domestic consumption in China continues to decline. Their production indexes continue to decline. Their property markets continue to decline. Overall economic data from China continues to disappoint. So we do not see in the next 1 quarter at least any reasonable uptick in the crude import demand. So that is the China part where we remain very sanguine. European Union continues to be in recession and is likely to aggravate further on that path. US demand continues to be disappointing, and the recession risk, particularly in terms of the leading indicators, are showing quite alarming trend. So we view China, US, and the European Union as pulling down the overall global demand outlook. That leaves out India and the Middle East and the rest of the world, where collectively they would not be able to compensate for the market situation on the demand slowdown. So what we are seeing is that the markets are oversupplied. The oil markets are oversupplied. And this oversupply situation is not likely to correct anytime soon. We have seen the Saudi Arabia reducing its prices for Asia by $1.5, or estimated in February they would need to decrease it further. To what extent? I would estimate it to be another $1 to $1.5. Russian Urals, the data is quite stark. There have been Platts has reported Urals being traded at about $35 to $38, which is roughly half of what the Brent price today is. Now, these are quite unprecedented data points. And as we go forward in this week and the coming 2 to 3 weeks, we see these bearish signals converging more and more. So we maintain a bearish outlook. So coming down to your specific question as to where the price are headed, price for this coming week could be headed sideways with a bearish tilt, but in the next 2 weeks or by the end of the January, we see significant decline of up to 10 barrels to the Brent.
Okay. So we'll see how it turns out in the end of January. Yeah.
Yeah, this is how we believe is looking like.
Hmm. Okay. So moving forward to my next question, while fuel oil prices seem to stabilize, will bitumen prices downtrend continue?
Bitumen is a product which has multiple layers of factors affecting it. The most important factor being the crude oil prices. Now, when the crude oil prices are in this bearish trend, so the bitumen and fuel oil cannot escape. Fuel oil prices also following uh, the crude prices. Secondly, the demand and supply scenario. The major consumption market for bitumen in the region is India. And with the seasonal factor of the winters in India, so the demand is on the lower side. So that is going to be exerting its own pressure onto the prices. And we see with crude in the bearish and the seasonal demand in the key demand market not looking good. So it would continue to remain bearish.
Okay. All right. So as always, you have shared great insights with us today. Thank you for being here with us, and it was a pleasure talking to you.
Thank you. It was an absolute pleasure. Thank you, Yukta.
Thank you, sir. Thank you all for watching. Kindly continue to show your support by liking and subscribing to the channel. Stay tuned for more.